So there's, you said basically there's two types of life insurance, right? There's term and there's whole. Can you explain a little bit of the difference? You had a great analogy, something like buying or renting versus buying the other
Right.
day.
So term life is like renting an apartment. You pay a low fee on a yearly basis, and every year you get older, that amount rises, and as the cost of your mortality increases.
Right.
And you don't, and like, so you can buy a 20-year term, okay, and
Mm-hmm.
the contract will show exactly what you're going to pay every year, and that's fine. Um, Versus whole life, which is like owning an asset. It's like buying a small house or an apartment where you have a fixed amount and you have a monthly payment or a quarterly payment or a yearly payment, and then you wind up with a cash value asset at the end. And there's also a hybrid in the middle called a yearly convertible term, where
Hmm.
you can buy a term which has a 5-year time limit on it. And any one of those 5 years, so you're getting in. So this is a good policy for a young family where maybe money's a bit tight when the kids are born or the kid's born. And you do a yearly convertible term where you buy the term and you pay the money out, but then you convert to whole at the 5th year or the 4th year when your incomes are rising. Maybe your wife's got time for a second job, or your husband has time for a second job, or whoever the primary income earners
Right.
are. And so then you're now funding the whole life policy, and you've got that as a savings vehicle as well.
Wow, that's great. So